stop right there. The entire market is holding its breath, betting big on a Fed interest rate cut on September 16th. But what if they don't? What if this 8.4% chance on the Fed Watch tool becomes reality and the Fed shocks everyone by holding steady? We're talking potential market chaos, with Bitcoin dipping 10 to 20%, Ethereum following suit, and altcoins getting hammered even harder. It's the scenario no one wants to talk about, but it's very real. It could be the ultimate test for your positions. In this video, I'm diving deep into why the Fed might skip that cut. There's a lot more going on than just inflation. I'll build the bigger picture for you. Then I'll share my personal playbook for both outcomes, how I'm positioning myself if rates stay put, and how I'll capitalize if the cut happens. This is Major Alpha, straight from my own strategies that I've been refining through this wild cycle. By the end, you'll have the insights to stay ahead, no matter what the Fed throws at us. If you're ready to level up, then hit the like button and stick with me through this video, because I have some special alpha at the end that could change how you trade the rest of the year. Before we jump in, a quick disclaimer. This video is for educational purposes only. I'm not a financial advisor and nothing I say here is financial advice. Crypto is extremely risky and you should always do your own research before making any moves. Never invest more than you can afford to lose. With that being said, let's start with the elephant in the room. The CME FedWatch tool is showing that there's over 90% chance of a rate cut at the September 16 Fed meeting. That's based on all the bullish signals from Fed Chair Jerome Powell at the last annual economic symposium. There, he hinted at a rate cut if the data supports it. Markets are betting that because fewer new jobs are being added and hiring is slowing down, the Fed might do a big interest rate cut to guide the economy into a softer slowdown instead of a crash. But that 10% no cut probability, well, it's not just noise. There's some real concerns inside the Federal Reserve, and too many people are ignoring it. So why would the Fed decide to not do an interest rate cut? Sure, inflation is part of it. Prices for everyday goods and services are still rising around 3% a year, which is higher than the Fed's goal of keeping it closer to 2%. Even though this real-time data from Trueflation shows us that we're actually closer to 2%. But it's not just about prices. There's a lot more at play, and understanding these layers is key to spotting alpha before the crowd panics. If you like alpha like this and want to level up your crypto game, then come and join me in the FireHustle VIP Discord. My team and I work around the clock to deliver the best information to the community. Just look at what we've been cooking up in there. And the feedback has been amazing so far. The link is in the description if you're ready to go deeper down the rabbit hole. Now back to the factors other than inflation. The job market still looks stronger than the Fed would like. Unemployment is holding steady and wages are going up. That's a concern because when paychecks grow, spending usually goes up, and that can keep pushing inflation up. The Fed doesn't want to cut rates too soon and risk overheating the economy. The role is to balance stable prices with healthy employment, and right now the labor market isn't weak enough for urgent action. Even with the latest job report, the Fed is going to interpret the numbers and consider them as one part of the equation. Outside of jobs, the overall economy is still holding up well. Growth looks solid, people are still spending, and businesses keep investing. Even banks are doing fine in this high rate environment. To the Fed, this shows that higher rates haven't hurt the economy enough to justify rushing into cuts. Powell has made it clear that they want to wait and see more data, and with signs that business costs are climbing, they're cautious about easing too early. There's also outside factors that the Fed has to think about, like tariffs and politics. Trump's trade policies could make imports more expensive, which would push prices higher. That makes the Fed less eager to cut rates right now. Even though they're independent, they don't want it to look like they're reacting to political pressure. On top of that, the Fed is glued to new data. If reports on jobs, manufacturing, or services come in stronger than expected, it weakens the case for a cut. Some Fed members want more proof the economy is slowing before making a move, which is why there's debate inside the Fed. High rates are also keeping bubbles in check. Real estate, stocks, and even crypto are already high. No pun intended on the bubbles. Cutting rates too soon could blow them up even more and risk a bigger crash later. And globally, what's happening in Ukraine or trade fights with China can push up energy and commodity costs, which feed into US inflation. The Fed also has to balance the dollar. Keeping it strong helps fight inflation, but hurts exports. It's a tough balancing act. Put it all together, and the Fed might hold to avoid cutting rates too soon. They've cut rates 3 times already last year, bringing us to 4.25%. Another cut now, without crystal clear data, could signal weakness and scare markets the wrong way. Analysts at places like Morgan Stanley are saying the odds might be closer to 50-50. Now, I'm not saying any of this to scare you. It's alpha. Spotting this 8.4% scenario or 50% scenario, depending on how you look at it, lets you prepare. Markets hate surprises, and a no cut could trigger that 10 to 20% Bitcoin dip I mentioned. It would also likely send our favorite alts down by at least 20 to 30%. But dips like that, well, they're usually the best buying opportunities in bull cycles, especially with things like ETF approvals and institutional inflows still in play. Now, let's shift to the best part of this video. As promised, my personal strategies for both scenarios. Just remember, these are my own plays. It's how I'm navigating this based on years in the trenches and multiple cycles. First, if there's no rate cut, this is the real test. Markets could drop hard at first, with investors pulling back into safer assets, the dollar gaining strength, and interest rates climbing. But I see it as a delay, not the end. The bull cycle is still here. We just have to wait for the October 28 Fed meeting. My strategy is to play the odds smart. I'm buying dips now while the probability of a cut is high at 90%. The market overall is already down. My main positions are in plays like BTC and ETH and alts like XRP and SOL where they've pulled back recently. But I'm not fully deployed. I always keep a portion of my portfolio in cash or stables. If there's no rate cut and we see things dip even lower, then I'll average down hard. That's the alpha. Turning fear into cheaper entries. No emotions, just stick to the plan and execute when the time comes. In times like these, focus on the coins that are the most resilient. For me, that's blue chips like Bitcoin and Ethereum first. They're whale favorites. And institutions are clearly stacking on every dip. In alts, I look for utility plays. XRP for its ETF hype and partnerships, and SOL for its ecosystem speed and AI agent ecosystem. Plus, I just got my hands on the Solana Seeker phone. I also keep buying dips on my highest conviction altcoins in my highest conviction narratives. But if you're not a pro, then you should be careful with the riskier plays. And when it comes to leverage trading, I'm cautious here. I started futures trading for the first time in this bull run, and based on where we are right now, I'm using lower leverage to smooth out my risk. And speaking of leverage trading, when the market feels uncertain, I'd rather stick with exchanges that have a proven track record. BTCC has been running since 2011, never hacked, and low fees. Sometimes boring really is better. If you want to get set up, check out my link in the description. They'll give you a 10% bonus on your first deposit to get you going. That means if you deposit $1,000, you'll get an extra $100 to trade with. Plus, there's up to $10,000 of bonuses. Give it a try and let me know what you guys think. Now, aside from futures trading strategies, patience is also my edge. No cut means holding through volatility and waiting for October. I also monitor all of the important reports on inflation and jobs that feed into the Fed's decision. But the real alpha comes from not panicking. I've seen cycles where September dips set up Q4 explosions like this. Now, if the rate cut does happen, here's my strategy with the 90% odds. This is bull run heaven. Liquidity floods in, the dollar weakens, and we get momentum to end this quarter off super strong, setting up a historic Q4. The alpha is to amplify everything. I'm continuing to deploy now on these current dips. BTC, ETH, and SOL are at my core, and I'm also accumulating on my highest conviction alts. I have AI agents, RWA, privacy, and more in my mix. They thrive when liquidity goes up. I won't have time to cover my picks in this video, but if you're interested in my highest conviction projects, then be sure to subscribe to the channel. I drop at least one video every single day covering my top projects, strategies, and thesis behind each one. It's an easy and free way to level yourself up this bull run. When the floodgates open, all that's left to do is to ride the wave. Expect big rallies for Bitcoin followed by major rotations into ETH and the big caps. Eventually, we see everything flow into small caps where we expect the biggest gains. That's exactly where lives are completely changed and patience is rewarded. So make sure you stick to your plan. Now, to wrap all this up, the September Fed decision is going to be one of the biggest pivot points of this entire cycle. Whether they cut or hold, the key is being ready for both scenarios instead of getting caught off guard. If they hold steady, we prepare for a dip and treat it as an opportunity. If they cut, we ride the wave of liquidity and momentum into Q4. Either way, this is where discipline pays off. If you found this breakdown valuable, then make sure to hit that like button and subscribe so you don't miss my daily updates. And if you want to go deeper with me and my team, then come and join me in the FireHustle VIP Discord, where we share the real-time alpha, strategies, and macro analysis that doesn't make it YouTube or X. The link is down in the description. And remember, this isn't financial advice. Always do your own research and never risk more than you can afford to lose. And keep your head clear when the market gets noisy. Thanks for watching. Stay sharp out there, and I'll see you in the next one.